Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 169. Cameron joins me today. We're going to talk about the first half of 2025, a little bit of a wild start to the year, wild decline, wild recovery. So we'll talk about some of the things that caused this, and we'll talk about some themes going towards the end of the year, discuss goals, finance, all of the things that you have come to enjoy. So, as always, get your mind right and let's get to work. Well, welcome back to the podcast, everybody. Cameron, how are you? Cameron's a little under the weather. I'm going to say it for him. He's got a little summer cold going on.
Don't sound too good, but I'm here. I'm doing okay. Market. I feel like the market's been crazy, and we always say that. But.
Yeah. This year especially. We'll kind of go into that. You know, I think we're doing pretty good. It's the 9th. This is June 9th, and so we're talking about the first half of 2025, and it has been, man, a pretty roller coaster year so far. I mean, you have the market started out well, then it nosedived, some people would say, and then it has basically recovered. So where we sit now at the halfway point of 2025, the S&P 500 is up 5.5%, the Nasdaq was up 5.6%, and the Dow Jones is up about 3.6%. But does it feel like more to you?
Yeah, a little bit. I mean, what's crazy is if you look at the year chart. I mean, April. Right?
Yeah.
April 7th, where we were at 4,900, 49.
On what? The S&P?
The S&P. And now we're trading at 6,200.
Yeah.
And that was April. Gosh.
Yeah, it is pretty remarkable. It's one of those things where like the numbers don't, you think, okay, the S&P's up 5%, but to a lot of people, it feels like a ton. So we talk about like people being risk averse, people being twice as impacted by a loss as they are a gain. And for most people, it's like, I'm just happy that I've made my money back that I lost, like at that April number that you were talking about, because a couple of weeks ago, and I think that the one thing for investors that they have to keep in mind is that don't these ups and downs seem so much more violent isn't the right word, but like the velocity of them, I guess. Velocity
oh my gosh,
is a much better word for that.
Why? I mean, why do you think that is?
Personally, I think it's because it's so much easier for people to trade that you have I really do think that and you see all these articles that talk about retail investors versus institutional investors.
Yeah.
I think that retail investors, the GameStop phenomenon, all of those things, I think that because we can trade with our cell phones, with our laptops, no commissions, I think that you just get a lot more investors in the market. And when they panic or they're euphoric, I think the pendulum just swings wildly, more so in both directions because of that.
Yeah.
So like you were saying, like when we were kind of talking about it, and you can talk about S&P at all-time highs right now.
Yeah. No, it's crazy. It's a fact. I mean, I think about and this is the anchoring bias, right? Like when you think about what you could have bought at, when it was trading at 4,900, the people that made out in this situation were the ones that stuck to their guns.
Yeah.
They keep investing, whether it was dollar cost averaging every 2 weeks, whatever. But a lot of people got super fearful, right? And then now we're at an all-time high for the S&P and these crazy price targets. I don't know if they're crazy or not, but a lot of these, I forget what Howard Mark calls these price targets, but they're like, there's two types of price targets: the ones that they know they're just guessing and the ones that don't.
Yeah, right. Yeah.
But they're at like 7,000 or 7,500.
And there were some, there were some guys, right? One that was kind of one bald guy that's pretty attractive a couple months ago that was saying, hey, you got to buy something when the market's down.
Yeah.
But I mean, like that's what we discussed. Like you can go back, go look at the the videotapes of us saying, man, on these really bad days, like you gotta invest in some.
Yeah,
start
walking in the fire, like you say. You have to.
Yeah, and so you look at this, but the problem. So going back to that, like anchoring bias, which I don't know if I guess we can talk about this now, or I don't know, maybe talk about it a little bit later in the show, but like that's going to be a problem going forward for people because they're going to remember the prices that they were just 6 weeks ago.
That's always going to be a problem. I mean, I have it. I have it from the time when I started, building my portfolio back during COVID.
Right.
Right.
Well, yeah, but let's break down like what caused this volatility this year if we're looking back at the start of the year. Politics, right? So there's euphoria in the beginning, right? New president, inauguration, everybody's happy, everybody's feeling great. And then all of a sudden, a lot of change comes in a fast period of time, which when you think about the stock market, what is it like?
Steady.
It likes steady. It likes assurances. It doesn't like big changes because all the analysts that you discussed, they don't know how to model it.
Yeah.
And so there's a lot of uncertainty with that. And so all of a sudden we have the Liberation Day, which we discussed is obliteration day for the market, which
April
is a lot
2nd.
of change, huge changes relatively quickly. All of a sudden those get rolled back a little bit. And so now we're starting to see that creep back up, right? So now the deadline, I think, went from July 9th, which is today, to August 9th.
Yeah. He extended it. Yeah. And I think he said that they're not going to extend it again. That's going to be it.
Is it?
Yeah. Some people are saying that there's no way, but there's some deals getting done. Like we talked about this and I bought some. I should have bought more, but Nike.
Yeah.
Vietnam deal. That stock went for a ride.
Yeah.
And Elliot, what's his last name? No. Elliot, the new CEO.
Oh, right. Hill.
Elliot Hill. Yeah. I mean, that guy, clear bet, easy bet.
Yeah.
And when he came up, I was reading about him. When he came up on the operations side, and he was known as like the supply chain genius.
Right.
What more could you want?
Yeah.
In a situation
it's Tim Cook.
And he grew up at Nike.
Right.
Right. So like he knows. I think I factored in a bias of like, okay, he's TCU. Maybe I'm like, drinking out of that Kool-Aid a lot.
Right.
But golly, I wish I would have bought more. Now that we have the Vietnam deal.
Especially when it works out, you always wish you would have bought more. I mean, that's the way you're always going to feel that way. I mean, you look at different things that you've bought, and when you look 5 weeks later and you're up 20%, how are you not going to feel like you shouldn't have bought more? So that political risk, it's so interesting because I've said this to you before. I've said it on the podcast, but I still remember the college professor I had that said, one of the hardest things, or really the one thing that when it comes to the stock market that you really can't predict is political risk.
Yeah.
And that political risk is going to be there. Now, I think that like how many times do people have to learn the lesson of like, it's really difficult to trade on what you think is going to happen, what you think's going to happen politically.
Yeah.
There are a lot of people who have lost a lot of money this year making decisions based on what they think is going to happen.
Yeah.
And you really have to be disciplined in not allowing that to make you, where you make decisions based on what you think is going to happen. Because this year you would have made the decision. We haven't even, we talk about Iran. And that, like, who would have thought the market would have gone up the Monday afterwards?
I know.
So even if you knew what was going to happen, you're not guaranteed that you're going to make the right decision.
And then the data too. I remember looking at it over that weekend, and it was like I was talking to a buddy, and he was saying, "Is this going to hurt the market, or is this going to, give a little bit of a bump?" Or no, he just has this going to hurt the market.
Yeah,
totally would think that's the case. But I guess if you look at the data over the last, I don't know how many years, these little conflicts will have, there's a slight bump in the market, usually.
right.
But then the data, I mean, if there's one thing I've learned about data this year, you can massage it and make it look whichever way you want.
Yeah.
So it's super tough, So it's like, and then from my perspective on that, then you just want to be in a position where if you're playing on the unknown, you want to make sure you're from that asymmetric place where it's like, is the downside much higher than the upside?
Right.
I'd rather it flipped.
Yeah, you want to have it flipped. Like Nike would have been a flip.
Yeah.
I think that, and going back to like your analysts, now this is what makes me mad about the analysts. S&P comes back. Now we're up for the year, and now they're raising their price targets.
Oh, it's ridiculous.
I mean, it's the same thing where like United Health went from 600 to 300, and then it gets downgraded. Hey, how about those downgrades before it, before it drops? I mean, like, the analysts to me always feel like they're a little bit late, so I always try to look and see like what can I find that they're not seeing,
Yeah.
that kind of thing. But again, going back to our point here, when you look at just the grand scheme of things overall, this shows why it's so difficult to try to time the market, and you're better off just finding good companies, letting them go to work for you, and not trying to be in and out all the time.
Yeah, I'd love to find that quote. That Howard Marks, he said analysts, there's two different types of analysts,
Yeah.
ones that know they're guessing and the ones that don't.
Yeah.
That is so good.
Yeah.
But yeah, I mean, and you also too, going back to your thing on day trading and GameStop and all that, like it's funny. I because I'm younger than you.
Right, yeah.
I got buddies that are like, have different biases with the market, where I think somebody at your age, right? They've been in the market for so long, they've seen so many things that maybe they're a little less, or they're preoccupied with family or whatever it may be. Where I got some buddies that are like texting me when the Iran thing was going on, like, how is this going to impact oil? Like, where should I? And I was like, dude, you're chasing.
Yeah.
Like, that's already priced in.
Right. Yeah.
If you're reading it on the news, it's too late.
Yeah. That chasing is going to be a big.
It's the bias of my generation.
It's a huge, and plus you just have so much data available that, and you don't know the quality of the data, and basically, like you said, finance is, especially finance, is one of the main businesses where you can massage the numbers, manipulate the numbers, and have them tell you the story that you want to hear.
Yeah, that's sell side analysts. That's their job.
Yeah, and so I think that plays a part. But when you look at it from a grand scheme of things, we're talking about anchoring bias, and I think that's going to be a big problem later this year. Is there's going to be so many investors who say, "Man, I could have bought NVIDIA at 105. Yeah. It's now at 160," and they're going to be anchored to that low price that it was in April. But the problem is NVIDIA for the year isn't up that much. I think, you go back to January, it was 150. Now it's 160. A lot of their price targets are way ahead of that. But I'm afraid that investors are going to lose out again on good companies because they're going to think about where they could have bought more, or they should have invested more back in April and May.
Yeah.
And so, and we'll see. I mean, seasonality with the market, August, September are historically not great months.
Yeah.
But I don't know about this year because we've had such a weird first 6 months of the year. This is not a normal first 6 months of the year. So we'll see. But, we have earnings coming up at the end of July, which is going to be a big deal. But a lot of those earning estimates have come down because of tariffs, so the expectations are a little bit lower than maybe they would have been otherwise.
Yeah. And I mean, this week is Prime Day for Amazon.
Oh, right.
And going back to inflation and earnings forecasting, apparently these because they extended it, usually 2 days, but now it's 4.
Right.
And they are getting a lot of buzz. Like it's too soon to tell on how much they're making from these 4 days.
Right.
But you can tell by the site activity, and the site activity for Amazon.com is highest it's ever been.
Wow. Yeah.
So you would think maybe they're look you lose, right? There's probably going to factor that in, but like I got a feeling these Amazon Prime days, they're really going to help Amazon's earning.
Oh yeah, they will. Yeah, I mean, they usually get a pretty good buzz, and that's the thing is like I think sometimes we forget that these companies have levers they can pull.
Yeah. Oh my gosh. And then the other thing too is the pricing on some of their products.
Yeah.
That was the article I was reading about Prime Day, is that these, going back to anchoring bias, people remember a product at a certain price and they don't want to buy it when, if it's a monitor, right? A computer monitor.
Yeah, right.
They don't want to spend a ton of money on it.
Yeah.
But then Amazon Prime days come around and that monitor is back to the price it was in 2021 or 2022.
Yeah. Seems a little personal. It seems very specific.
It's not like I'm trying to buy a monitor or anything.
Yeah, I think, but that's the other thing about when we talk about like anchoring bias and this stuff. Again, we just talked about like the velocity of that, and that's the whole thing with like pre-COVID numbers. Yeah. People remember what real estate was in 2019.
That's tough.
They remember, and so when you have this fast-paced price change of what real estate houses were, those costs, Like it really does take time for, people's minds to digest that because they're, they remember, they get anchored to those prices. And so but the problem is that that means that you're going to miss good investments where, Nvidia is about to pass $4 trillion in market cap, which is just phenomenal.
Which is crazy.
It is. But the value, the amount of chips that they're selling, the US, the other thing too, that you have to be cognizant of is that the story that brought the market down in April, for a lot of companies, that story has changed. So we'll stick with Nvidia. But at the time in April, we were not going to allow them to export chips. There's all these things that were going to be kind of impact their sales numbers. Well, now the U.S., where we sit right now, the U.S. has signed a trade deal with China. They're now going to allow different things. We get rare earth metals from them. They get, they're going to get NVIDIA chips, that sort of thing. And so the story for NVIDIA has now changed versus where it was in April. And as an investor, you have to realize, hey, the story's different than it was. The stock is probably not going to go back down to that level unless something really bad happens.
NVIDIA is a difficult one too, because I remember at certain points I was like, NVIDIA is kind of expensive, but that was based on a logic that was previous. I wasn't updating my logic on the fact that these chips and how many companies are investing in it, and how these companies are able to put it on their balance sheet in different ways. Software companies,
right?
So yeah, NVIDIA is a tough one, but I think like if you I know we talk a lot about like stuff going on in the market. I always try to like add an application piece. Like if I was, anybody, like the application piece, like how do you take all these things we're talking about and learn from them? It really is dollar cost average in the S&P every 2 weeks, because people usually get paid every 2 weeks.
Right.
And then, if you want 10, 20, 30% of your portfolio in individual stocks, totally fine.
Yeah.
Just make sure you're doing golly, if people just did the dollar cost average on the S&P, how rich they would be when they're older.
Buffett's like, just hit the easy button.
But it's not the sexy thing.
No.
That's why.
No. Now we're doing like, we don't have time to talk about it today, but like, like Robinhood doing like these derivatives on like private company.
Oh yeah, that's right.
Private
OpenAI,
like they're doing like tokenization of private shares and like using derivatives. We'll come back to this in a later episode, but that's what people want to do. They don't want to do hey, I put $150 into the S&P this 2 weeks. But I swear, like, let's go back to 5 years old. The I don't know, nursery rhyme or the lesson that you learn, the turtle versus the hare. That is the stock market, man.
Yeah. The patient versus the impatient. Yeah. I probably should have wrote that down. Yeah, that's crazy. And now too, we're seeing conversation on SPACs come back.
Well, that's the euphoria. When you get the market at all-time highs, you're going to get euphoria. We got a lot of deals coming in. Now there's a lot of IPOs coming up, and so there will be that.
And we just hit a record too for retail investment. Yeah. Retail investors now, it's the most ever in retail investing dollars.
They put U.S. individual investors traded record $6.6 trillion in equities during the first half of the year.
That's pretty good over there. You can't prepare to like that. Mm-hmm. I need to. Yeah, no, it's crazy. Yeah, I mean, what does that tell you though? People are chasing, or does that tell you?
But they're also creating a lot of activity in their account. So most investors, when you look at their portfolio, they've owned what they own for an average of 6 months.
Yeah.
So most, like,
that alone, the tax implications.
There's a lot of retail investors that treat the market like a casino.
Yeah.
So we have that. So how's first half of the year go for you personally? Goals? We got the London Marathon, like
going back to school.
Start
my MBA in September. Yeah. Super stoked about that. Not sure what that's going to look like. But it's weird to feel like you're going back to school. Like there's that college piece, that feeling when you go to college, you leave for college and it's like, I don't really know what I'm doing.
Right.
Like I don't know what to expect.
Correct.
Because I've never done this before.
Yeah.
But I'm just going to go and I know I'm going to get better. I'm getting that same feeling thinking
Yeah.
about my NBA.
Yeah.
So it's good. Good first half. I'm hoping for a better second half too.
Because you haven't been in school since,
4.5 years.
yeah. It's weird. I never really leave that arena. You know, like,
Yeah.
so I'm just
You like school a
I'm,
little too much.
I'm just constantly in that, but I do understand, like, that first week of school feeling, And
Yeah.
I think it's good. I think it's, there's so many individuals who think, we're in July, it's kind of the summer months, but it's like, man, you still have half the year. So what goals were you working on at the beginning of the year? Take stock in that. Think about, what have I saved the money that I want to save?
Yeah.
Have I invested the money that I want to save? How does my portfolio look? Do I still like the companies that I invested in? Is their story still the same? Is it something I still want to be invested in? And then obviously I think that not necessarily people who listen to this, but just people, normal individuals out there that kind of, we're done with New Year's resolutions, all that kind of stuff. We get into the slow summer months, and then it's like, I'm just gonna wait till 2026. And it's like, man, you still have half the year left, man.
Yeah.
You have to use this time, to get the things done that you've been wanting to get done.
Yeah. How was the first half for you?
It was good. I mean, there's still different things that I want to do. Like I still want to like get us a real studio for like this thing is one of the things that I want to do.
That'd be cool.
So getting that done. Savings goals good, investment goals good. I mean, I'm the same as you. I mean, I invested a lot personally in April. I wish, obviously, I wish I would have done more.
Yeah.
But we're doing good. The marathon was a big one to click off at the first of the year. By the way, are you having any do you have any aches and pains from it still?
No.
Yeah.
That's the
beauty of youth.
I was about to say, I don't know if I should ask you the same.
Oh man, like I still know, like it's the beauty of youth. I read something that yesterday that said like your prime running years are 25 to 35.
Fantastic.
So that you're like, that's right in your wheelhouse.
I need to sign up for a new one.
So you need to use that to your advantage. No, it's weird. Like I feel like the aches and pains of all of them start to accumulate at once. That's a weird thing to say. Like I didn't really notice until like the last two. But like every day, my legs ache, and when I get up in the morning, like just weird little,
Yeah.
I could be doing this, I don't know. I could be close to the end,
That took a turn.
No.
Well, we got to figure out what the next one is. We're probably going to do the Cowtown. I'm assuming we're going to do that, but maybe the Dallas Marathon, maybe.
I don't know. I'm not the only fools I'm doing. I'll do Cowtown. I'll do that. But the only fools I'm doing are like Tokyo, Boston.
Yeah.
The big ones, like maybe Sydney. You go do the rock and roll, or you go do you have at it.
We'll see. I'm looking at a few of them right now, so we'll see.
So the big deal for you the rest of the year is just getting your NBA cranked up.
Yeah.
Getting that going.
Get to a good spot with that. Yeah. Life's pretty good right now.
Did you, not to kind of lead you, but like expectations of like the market this year? Is it kind of, I don't think you would have guessed it would have been like this.
No.
But like, what were your expectations going into the year versus where we're at?
I knew we'd have a lot of volatility.
Yeah.
That I expected. I don't know if I expected this much.
Yeah.
I did think based off of, I have anchoring bias because I thought about when Trump was last president, I was in your class and I won that stock competition.
Right.
And really I won it because I just triple levered the S&P and took out a bunch of margin.
Right. Yeah.
And
that is definitely not a recommendation.
No,
Definitely
don't
not a
do
recommendation.
That. This is fake money. And it was one of those things where I was like, this is my personal bias, but nobody remembers who got second in that competition. They just remember who got first.
Right.
I was like, I'm going to swing for the fences.
Yeah.
And I ended up having a pretty good lead because of that. So I had that anchoring bias of like, okay, first time Trump was in, the market did great. Right. Is that going to be the same the second time? I thought, I still think, yeah. And we're seeing it right now, but golly, it's a roller coaster.
But it's just different, like it's just different. I mean, I think that, now because of what happened in April, the next time the market goes down, it probably won't be as bad because you will have you'll have all the investors that feel like they missed out this time.
Yeah.
And they'll be more likely to buy the dip.
Yeah.
And so you'll probably see some
That's
of
a
that
good point.
activity, that you'll see some of that activity because it'll be fresh in their minds. We hadn't had a 10% correction, 15% correction in a while. So now you see that. But I mean, what are your expectations going forward with interest rates?
Well, we got Powell's up in May, right?
Next 2026.
Yeah. He's up in May. So I got to imagine that Trump's going to appoint somebody that is going to have a prerequisite of cutting rates.
Yeah, but Trump wants rates to be like 2% lower.
2% lower?
Or like he wants them like 1.5 to 2%.
Which is crazy.
Yeah, that's
if
not.
we get that,
no.
If
I
we
hope
get
we
that,
don't.
I mean, it didn't treat us well last time. I don't think it was like, what was the thing? We got drunk on the punch, and then we had the hangover.
Yeah, right.
It's because everything was so free. The money was free.
Yeah, you don't like. Rates are normally only that low when there's trouble, and the jobs market isn't showing that. Unemployment's still 4.1%.
People are not letting go. People are not laying off. Companies are not. I mean, we're
here
seeing
and there you see it,
but the numbers.
normal, but it's
like
normal.
everyone was freaking out about Microsoft laying off.
Yeah,
4,000 people.
right.
You know how many employees Microsoft has?
Yeah, well,
that's like nothing.
They never give you the context. They never tell you what percentage of the workforce it is.
Yeah, and it was all from that Activision acquisition, which it makes total sense. That's like we see that that's the shtick.
Right.
Company acquires another company, give them about a year, and then they lay off the overlap.
You got 3 people doing the same job.
Yeah, basically.
So
yeah, I don't know. I mean, I think we're gonna have to at some point have cuts. I'm a little worried who Trump is gonna put in as the next, and I'm also worried the fact that there's a little bit of drama between the two. Like Trump is being very direct in his insults against him, and I totally,
But Powell came right back when he was at that conference and said that rates would be lower. He would have already
there was a tariff.
If they would have if the tariff thing was resolved, which is that's just them kind of sharing jabs, but.
And he appointed him. Trump appointed him.
Right. Well, I mean, that's the way. Nobody remembers that.
Yeah. So,
but I mean, the other thing, we need to do an episode on we haven't had a chance to really go through it, but the new bill. So like politically, we have the big, beautiful bill passed. So that removes a lot of uncertainty with estate planning and, tax rates for the end of the year. So we got that. So really the only
appreciation.
Yeah. The only minefield left really is the tariffs. But I don't think that's going to go away. I mean, I think that a lot of it will go away, but certain countries, like there'll be little sporadic pieces of it, I think. But getting the deal done with China was huge. I mean, so I think that we're looking a little bit okay, but the market's come back. It's like, what's going to take the market higher? That's what I'm like.
I would think cuts. I mean, right? They would have to. Money's getting cheaper. Cost of capital is coming lower. These companies, you're going to have... People don't talk about this, but like tech companies right now, they are not spending on anything other than NVIDIA chips.
Right.
The usual course of action is software companies buy other software to become more efficient, whatever.
Right.
Software acquisition in the last year has been nil. It's been nothing because the cost of capital is so high that when they go to the board and they're like, hey, we want to invest $20 million in a Palo Alto network software, the board's like, your cost of capital is, let's say 9%.
Yeah.
No way they're going to prove that.
Well, that and like it takes their profit margin off the table. So that's going to be, going into the end of the year, I think those are going to be the two themes. Like, does tariff resolution come about, and do rates come down? Yeah. But again,
which one's more impactful, you think? I don't think we're going to get both at the same time.
The rates, I think the rates coming down will be key. But the thing is like, think about like just as an investor, as whatever, if you've just been waiting for rates to go down,
gosh, you missed out.
How much have you missed out on? Like it can be a factor, but it's not the factor. Like you still have to make decisions. You still have to live your life. You still have to like carry forward. You can't just be like waiting. And then all of a sudden, 3 years have gone by and, like, I just it's a factor. It's not the factor. Like you still have to, and I think that, more companies are going to IPO. There's going to be some pretty exciting technology companies, some AI data warehouse companies.
Oh, we just saw an IPO. Circle.
Yeah. Circle
IPO'd at $40 or something like that. Now it's $400.
Yeah. I mean,
Figma just announced an IPO.
Yeah, there's going to be a big backlog of these.
Oh my gosh.
Which companies did we discuss about, like, why would we invest in these companies to get paid a nice dividend to wait for all the IPOs? Which ones? Morgan Stanley, Goldman Sachs.
Oh yeah,
look at how those have done. So those are going to be some pretty big deals. But one thing that we can always be sure of is that there's going to be uncertainty. You have to make decisions through that uncertainty. And the first half of 2025 was no different than a lot of years. Gave you one great opportunity to invest. We'll see if it gives you another.
I'm excited to see, because there's a lot of companies that are more mature than usual before they go on IPO wise, right?
That's right.
And listen to these numbers. So Figma, we talked about this before. Adobe was going to acquire Figma, and they backed out. And there was $1 billion acquisition fee.
Cut fee.
Cut fee, yeah. So they just wrote them a check for $1 billion. Their cash position's humongous. It's like 1.5 or 1.6 billion.
Right.
These numbers, no wonder Adobe tried acquiring them. 46%, because so just for the audience, when you initiate to the IPO process, you have to release certain stuff about your company, right? And it's part of the, what do they call that? The road show that they'll go around and invest.
Yeah.
So 46% year over year revenue growth. 46%.
Right. Yeah.
That's insane. Their gross margin, you want to take a guess?
75%.
So software companies usually are much higher because the overhead is much less, right? 91%.
Yeah.
I mean, it's just what does
Figma do?
Figma does there's probably someone that can explain this better that works in this field, but usually it's product managers or people that are building some kind of app. Figma is like a whiteboard for that. Like, how do I build out what I want this user interface to look like? It's like the early steps in developing a product.
Okay.
People use Figma.
Yeah.
Figma's taken that market over.
Yeah.
So much so. Figma is a small company, relatively speaking.
Yeah. It says they create prototypes, share designs for digital products like websites and apps.
Bingo. Yeah. So 78% of Forbes 2000 uses Figma.
Wow.
For a small company, that's pretty good.
Smallish company. Yeah. But that's the thing is, like, we need to do a show on that. We need to do a show on like companies we think are going to IPO and kind of what they do in their background, because there's some pretty good ones that like people have been waiting on. I remember this, like, you're too young to remember this, but I remember this after the financial crisis of 2008, 2009 of like companies coming public. They waited throughout the financial crisis because it was such a bad time. And then it's like, okay, I think that even happened after like the tech bubble burst. Google waited forever. Some of those companies, Facebook waited a long time. Just to wait for the market to get a little bit better. And we're seeing that again now.
Facebook is in a good position right now. I don't know if we have time to talk about that, but Facebook is stealing talent like no other and giving out these crazy pay packages for it.
Yeah. And I wonder too, like Apple.
Yeah.
Everybody's waiting for Apple to make a splash. I think if they came out with some kind of AI, the stock right now is about $210 a share. I think they'd go to $230 if they would just announce an AI strategy.
They're going to have to, because Samsung has their big event today in Brooklyn, New York.
Okay.
And I forget the name of the phone, but they're partnering with Google.
Okay.
And Google's providing a lot of the AI infrastructure for the phone.
Okay.
So it puts a little pressure on Apple.
Yeah. Let's come back to that. We'll do that in another episode. We'll spend some more time on that. All right. So that's it for today, the first half of 2025. And as always, don't mistake activity for achievement, and we'll see you next time. Thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. RideR Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.